both parties and Mr. Mnuchin, Pelosi, and other people privy to these negotiations are working into the night. So we are getting, from what I've been reading and what I've been hearing, we are getting very close to a number. There were a couple of sticking points that were with the states and the spending that were standing in the way of these negotiations. They have since started to take some of those out. They brought back in the actual checks that would go out to your average Americans, which is something that was argued that should have been part of this from the beginning, but for some reason, one side was saying that it was inflating the bill, the stimulus package, way too much for their comfort, and now they've brought it back, and they're really trying to put together this package to send to the president. If the stock is well valued, the supply and demand is there, and that people are interested in this type of, whether it be a solution for technology, a solution for brick and mortar, it doesn't matter. People are going to go and buy the stocks, and the market is going to continue going up. Another thing, as I've always said, earnings drive demand for these stocks. Earnings drive markets. So if they are beating the earnings as they're going along, that's another thing to move them up higher. So those are a couple of reasons behind my rationale as to why I think the market could go even higher, and in the new year, much more than we think, along with the vaccines that are occurring right now. We're seeing the second one, Moderna, coming out this week, where it's going to be reviewed by the same FDA panel that reviewed and approved the Pfizer vaccine. And this particular vaccine doesn't need that special handling. It doesn't need the sub-zero temperatures. It can use standard refrigeration, which most hospitals and clinics already have. And that could be a boost to the market, although I think some of it's already been kind of priced in. I really think that value is starting to have its day. I mean, we're seeing certain value stocks that have been lagging behind for years, and we're at a point where we're starting to make that sector rotation, and I think it's going to be pushed back a little further, because I do see some techs still making some major headway. Look at Roku. Amongst what had happened, they just announced a big deal going with HBO Max, so that boded well for the stock. So there's a couple of scenarios that are happening, but they are far less than what it was previously. So then now the value stocks, when is the time to get in? When not so many people are getting into it as much, and this is that time. So you want to look for your value mutual funds. Be very selective about the value stocks that you get into, because you could be holding on to something and it doesn't go the way you want to. So you have to be careful there. But another thing to remember, there are plenty of value dividend rich stocks that pay high dividends, stocks that are brick and mortar type companies that do very well when there is a sector rotation. And as we're starting to see, this is something that all of a sudden you wake up and they are flying off the shelves, or they are running up kind of like the tech sector, and deservedly so, because it's been years and it's time for them to possibly shine. Any value ETFs, where you're getting into high quality names that pay high dividends, I would say start there if you want to mitigate the risk a little bit. But popular names, believe it or not, you have value names like Philip Morris, AT&T, BP, ExxonMobil. These are just a few names where they pay a very attractive dividend. And if you own these stocks, a lot of people who have owned these stocks, they have owned them going on 30, 40 years. And these stocks have consistently rewarded them with dividends over those years, albeit what has happened, and if you look at BP, you did see it cut its dividend in half because of what was happening in the pandemic. And that's not out of the ordinary. You have to be prepared for that as a value investor, that at any time a dividend can be cut. But most companies that are highly valued in the dividend arena, the cool thing about them is that they will do anything to prevent their dividend from being cut. They will cut in so many other ways that you just want to make sure that your company is doing everything that it can before they actually cut into that dividend. But they are very attractive. I think these are the companies that are just starting to wake up from this rotation and say, hey, you know what? Why don't we join in? There's plenty of room for everybody. Institutions are all over Bitcoin right now. And now the question is this the time for the average investor to hop in? And the answer is quite simply, if you feel that it could be a good part of your overall allocation, the answer is yes. But do so very carefully. Make sure that you're getting in there. I mean, I have colleagues that went in at around 15,000. I've had colleagues who have owned it from the beginning, and they have done very well with it. The thing is, it was not available to everybody. And another thing you have to take into consideration on the flip side is that as quickly as it went to 23,000, it could end up back at 17,000, So you have to watch out, you have to be careful and know what you're getting yourself into. The only problem aside from that I see with Bitcoin is you just have to make sure that you're getting into the Bitcoins. In other words, you're not getting into someone's currency called Steve's currency. You're getting into well-known Bitcoin names, and just like anything else, those are the areas that show promise, show growth, and you will have it as part of your total portfolio, and you'll make money. This is not a complicated thing, but it is only singular. And once again, repeating, when it's singular holdings, you really have to be careful and not bet a lot in here. I would go no more than 5% right now into the Bitcoin realm in terms of any asset allocation.